So our client was able to increase their overall after-tax income in their pocket by over $2,400 a year. Their overall nominal dollar amount that they received in their pocket after tax was close to $100,000 more, and they reduced their tax bill. So that's the summary of putting together a really good financial plan. So how do we get to that point? How do we save this client $2,400 of extra income every single year, reduce the tax bill, create a better strategy? Well, we do this in every single financial plan that we put together, and I thought it would be beneficial for all of you to see what's the process we use here at Parallel Wealth to build out a retirement and financial plan. So we're putting together a 5-part series on how we build out and the benefits of building out a good retirement and financial plan. Now, this is video 1 in the series. Video 2 through 5 are going to be downloadable. We'll put the link below. You can download them. They're absolutely free, and you can go through the other videos. Now, again, this video is more data entry, how we get to the starting point. The sad part is that the starting point is typically the end point for most advisors. So video 2, 3, and 4 go through looking at CPB timing, the RSP meltdown, which is a lot of the tax strategy, and then the last one is going to be the laddered income. Now, the last video in the series is going to summarize kind of what we did, the tax savings, the income benefit, all of that into the video. So again, stay tuned. We'll go through it in this video. Video 2, 3, 4, and 5. We'll put the link below. Click on there. You can get access to all those videos to get the full comprehensive idea of how we build out a financial and retirement plan for our clients. So as we jump into our fact finder that we send out, you'll see here we have Joe and Jane Smith. They're both 65 years old, just recently turned 65. At the top here, we use some assumptions within our plans, but we say, look, if you don't want these assumptions, want something different, put that in here. So again, this client asked for a 3% inflation, as well as life expectancy to age 90. When we look at their financial goals and income need, they said they were making about $5,000 per month. Now, once they hit retirement, which has just started now, they're looking at about $4,000 after tax on a monthly basis. And for their no-go stage of retirement later in life, they want to have about $3,000 per month after tax in their pocket. And of course, they'd like to retire now at age 65. As we keep going, they break down some goals that they have, which is to gift each of their 2 kids $25,000. And they've left a bit of a time range in there from 2025 to 2030, depending on cash flow, tax plan, and all of that, as well as downsizing. And they would like to downsize, they put a comment down here, by age 75, anywhere between now and 75. And they want to assume the downsize will net them about $150,000 net. Now, the rest of the sheet, I'm not going to go through it all to waste your time, but we basically grab kind of employment, pension stuff. So Jane's got a pension that's about $6,000 a year. They have some TFSA RSP, spousal RRSP. Joe also has 2 liras. One is provincially jurisdiction of BC, one is Ontario, so a little bit different there, and I'll show you how that builds into the plan. They have a bit of a joint savings account with a cost base of $12,000. So again, we have to adjust for that potential tax bill down the road when they sell that in the form of a capital gain. And then they have their principal residence, which again is valued at $600,000. So if we jump into the financial plan, again, we use a program called Snap Projections. Now, Snap Projections is only available to financial planning professionals. It's a great program. I like it because it does a really good in-depth job. It breaks it down nicely. And when we put financial plans together for clients, we actually go through this with them. Now, of course, we build it in the background, but we share our screen and we go through it, which you'll see here in a second. It's pretty easy to understand, and you can kind of break down the numbers. So again, client details in here. General information is more when do you want a retirement, life expectancy, inflation, some of those data entry points that the client was asking for. In income, you're going to have by default employment income. Of course, they have none. And then another income I added in here is kids. And this is going to be, and you'll see this in a second, the money that they want to help out and give to their kids. Next, we break down their asset base. So again, I've put all their different assets in here, labeled them, TFSA, RSP, how they're working. And we've kind of broken down a 50-50 portfolio between fixed income and equity, and it averages out at a 5.5% rate of return. A couple other things that we put in here, and this is really important, is what is your contribution room? So for Joe, he has a 13,000 contribution room, which we grabbed from his sheet, as well as, and this is a really important part as well, when do you want to convert your RSP to a RIF? And I put age 65 in here. So again, just breaking down when you want to convert that. We also have real estate in here. Again, $650,000 home. And we put a downsize at age 68, so in 3 years from now, to about a $450,000. So by the time realtor fees are paid and all that, moving costs, they're going to net about $150,000. Now, if I jump over to Jane here, again, her assets are in here. Same thing with her. So RSP, spousal RSP, when they convert, all of that has to be in here. Now, again, Joe, I mentioned, has a LIRA, locked in registered account. Now, his BC1, that is locked in for life, meaning that it's going to roll over 100% to a LIRA, or a LIF, sorry, a life income fund. Now, with his Ontario one, we can actually unlock 50% of it. So I say, I want to unlock 50% of it to his RSP account. So that's set up as well, so that half of that account, when we convert it to an income account, will roll over to his RSP and his RIF eventually as well. So I'll skip the debt section, but again, if we have debts, we'll put that in mortgage or other debt. And then government benefits. So this CPP and OAS, I've put in their amounts that they told me they're going to get. And I've just left the default at age 65. I'm not going to play with timing of CPP at this point, but we'll get into that in the next video. So all the information's in here. They haven't mentioned anything about any life insurance policies, education planning, corporations, and settings is kind of on our end that we play with. So I won't play on that. I'll click on planning pages now, and it's going to give us kind of this view. And I'll go to the combined view, which kind of breaks down, income, CPP, OS that they're going to collect, and then the value of their accounts over time. So they have about $525,000. Now again, showing $0. If I go into Joe, you'll see a breakdown of Joe here. His TFSA, RSP, LIRA in BC, LIRA in Ontario, non-registered account. Again, I have zero income coming out, so the numbers aren't going to work yet. But I have the kids in here, so I've noted a $25,000 gift to the kids at age 72 in 2030. So there's $25,000 coming out here. Of course, they have 2 kids, so I have the other $25,000 coming out on Jane's side. You'll see her defined benefit pension plan in here, increasing with inflation. Now, the next step is, let's figure out what the starting point is. We've now entered all the data into the software, and I want to hit generate and figure out, okay, what after-tax real dollar number can we generate from now to age 90 just on raw data entry? And I hate to say it, but I find that most financial planners, that's where they stop. They will give you that, Joe and Jane, I've put all your information into our software and calculated it, and here's how much you get, okay? This is how much work they've done. If they've taken that information, they've just data entered it into here, and they hit apply. And so you can see here, if I hit apply and run, it's going to tell me that Joe and Jane, with the assets they've built, the CPP, OAS, and pension, they can generate just under $75,000 per year. This is after tax and adjusted for inflation. So a very nice income. Now, if I stopped here, you'd have a plan, not a very efficient plan, and one that's not going to kind of check all the boxes. But a client could look at this and say, hey, this is great. I originally asked for only $4,000. If we go back to their sheet here, we'll see a $4,000 ask, and I can get over $6,000 a month. Like, this is great. This checks the boxes. The problem is that we're paying too much tax in this situation. There's no tax planning or income planning, or what about CPP? So you want to dig into this deeper. And again, if you have a financial plan put together for you, make sure you ask, hey, this is great. This shows CPP at 65, but what about if we deal it to 70 or 69 or 68? What does that look like? What about delaying OAS? If we I'll just jump into Joe here. We'll see, okay, well, like your tax rates, like, they're not bad. They're pretty level actually, but is this the lowest amount of tax I can pay? I can click on here and see total tax bill, $72,000 just from Joe in taxes. When I look at a combined tax bill, we're looking at a combined tax bill of $144,000 of taxes. Is there a way to lower that tax bill and create more efficiency within the plan? So in the next video in the series, that's what we're going to do. We're going to look at CPP timing. Then from there, we're going to look at an RRSP meltdown. How do we draw down that RRSP in a more tax efficient manner to put more money back in your pocket and pay less to the tax man? In the video after that, we're going to look at a laddered income strategy. How do we create more income early, less later, which is how you're going to spend money. When you get into your 70s, 80s, and 90s, you're going to spend less money. So you might as well spend that now with the peace of mind that you'll have more later on. And then finally, we're going to summarize everything and figure out exactly all the numbers behind everything, how much tax we've saved for the client, how their estate looks, and all of that. So we'll summarize that in the future videos.